Lessons from financial experts. Let's have a look. Hello everyone, Florian.heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee and let's have a look at this article from Yahoo Finance written by Jessica Young discussing 13 lessons from 6 financial experts. Let's see what they have to say. What do you reckon? Be a bit of fun. So, a panel of financial investing and mindfulness experts have encouraged women to take small steps to improving their financial well-being. Just start now was the resounding message from Fidelity Australia Managing Director Alva Devon and Berman Invest Chief Investment Officer Julia Lee, who were panelists at the Women's Money Movement Wealth and Wellbeing Breakfast on Thursday. Okay, so let's see what advice they're giving to women. So, and it only takes small shifts in mindset and introducing some microsteps to just make that first step, according to eToro popular investor Sharon Connolly, Rich Women author Kim Kiyosaki, and Thrive Global Asia Pacific Managing Director Alex Christou, and Yahoo Finance Editor-in-Chief Sarah O'Carroll. So let's have a look. So, number 1, don't let inexperience stop you. If you don't want to invest because you've never done it before or don't know the first thing about it, remember everyone started out here. Sharon Connolly is one of the most popular and successful investors on the online trading platform eToro. Now, I've seen this. I've had a look at eToro. And it's interesting where they want to encourage you to copy or compete with other investors. Is that done on purpose to kind of manipulate you I guess maybe to encourage people to go in? You've got social capital there that you're drawing upon. So I can see how it's smart from eToro. But it wasn't always this way. In fact, she didn't know anything about investing for decades. And it was a tough financial position when she first began. I made my first trade by accident. I was 42 and got divorced and was barely making ends meet, she told the Breakfast Club on Thursday. Then in 2013, I got a $20 voucher for eToro. I had zero interest in trading, but I thought it was worth using the voucher. She invested the money in Facebook because it was a brand she knew, then promptly forgot about it. When she checked back on the account a month later, her $25, it was originally $20, wasn't it? Turned into $65, and she'd been hooked ever since. I've had no idea things could turn around that quickly, so I started getting interested. Okay, yeah, I mean, getting in there. If you start making money, it makes you feel good. How often is it? Is it luck, though? You've got to keep that in mind, everyone. So don't assume investing is difficult. You don't need tens of thousands of dollars to start, and you don't even need a financial advisor. In fact, Devon says investing can be as easy as buying a pair of shoes online. I would say every woman in this has brought something off iconic, right? Okay, she's talking about buying shoes online. I've got no idea about that. The first step can be straightforward, as just creating an account with an online trading platform. Then look to free resources available online on how you choose stocks and invest. Well, yeah, I mean, you need to get into nothing really groundbreaking here with regards to advice. Just do it and learn. Do people need to be told this, guys? I mean, we've got a majority male audience here, about 88% blokes watching the channel. Ladies watching, is this revolutionary? I guess it's something that maybe you've never been exposed to, or maybe never even considered. I'm teaching my daughter now, my 8-year-old daughter, I'm explaining to her how you want to get a money machine. You want to get to a point where you invest your money so it gives you money for not doing anything. And then if you want to buy something, you use that money, the money that you earn from your money machine. You want to get your money machine to the point where you don't need to work, where you don't need to depend on others, where the money machine is taking care of you. So I'm trying to explain that to an 8-year-old. Hopefully they can learn from that and build some habits. So start sooner rather than later. And this is the thing. Everyone will always think, oh, it's too late. I've left it too late. I'm too old to start investing. You're never too old. I mean, sure, if you had done it when you were 20, if you had have started when you were 8 years old, you may be much further ahead. But that doesn't mean you can't, start saving, start investing, get control of your finances to live a happier life. You don't need to be a millionaire. You just need to be stress-free. Think about it. I mean, for those of you that can remember when maybe you didn't have an emergency fund and times got tough, and compared to maybe now, you do have some funds in reserve. You do have enough there to keep you going. Just the stress level, it's worth more than people might actually realize. It is such a big difference in your quality of life. Just that stress gone. So, the more time you spend investing, the more your money will work for you. An investment of $10,000 with monthly $100 top-ups could turn into more than $1.3 million in 50 years' time, she said. So I think the key is to start as soon as you can, do it regularly, and it doesn't have to be a huge amount. The amount of time you spend investing is a powerful way to build your wealth. Well, that's the thing. The argument is what's more important is time in the market, not trying to time the market. Could that go for housing as well? Figure out your risk appetite. The first thing to know is that women are often more risk-averse than men when it comes to investing. And I think that's pretty well, just judging by Rachel and myself, I'd say that's 100% true. A Fidelity Australia study from 2019 found that nearly half of women, 46.2%, prioritized minimizing risk when investing, compared to just 26.8% of men. Meanwhile, women are more than twice more likely to describe their appetite for financial risk as very low, 33.8% versus 15.7%. Understanding your risk appetite will help guide your approach to your investments. According to Devon, men tend to be performance-orientated, such as taking pleasure in high returns, while women are goal-orientated, such as saving for a particular item or event. We are risk-averse, and that's really good to know. So we've got to de-risk investing for women, and women have to de-risk their investments as well, Devon said on Thursday. One way to de-risk is to look behind the investment itself. Take Bitcoin as an example. She said she wasn't a fan of the cryptocurrency because she did not understand the supply and demand economics of it. But what underpins Bitcoin is an entirely different matter. The technology that sits under Bitcoin, being blockchain, is phenomenal. It's an enabler technology, she said. I've just shown you how to de-risk your de-risking tactic. Additionally, your age will be one determining factor as to how much risk you're willing to accept in your investments. If you're younger, you have more time to ride out the highs and lows, but if you're older, you'll be looking for a more stable income. If you're going to move to put money to work, the mindset shifts from earning money to making money, said Devon. If you're going to put money into markets, you're going to have to accept some risk, so you'll have to be the judge of what risks you can accept. One approach is to thoroughly research where you'll put 75% of your portfolio, with the other 25% for riskier bets. A good rule of thumb, Lee added, is to adjust your risk according to how old you are. Whatever your age is, that should be the percentage of your safe assets. If you're 20 years old, 80% of your assets should be in growth, 20% in cash accumulating interest. 50 years, it should be split 50-50. What do you think about that one, guys, that rule of your age? What do you reckon? I don't know about that one. Understand what drives investment markets. Observe what's happening in the world, the investing chiefs advised. Lee uses a thought experiment in which she pretends to time travel 2 years into the future and asks herself which investments she wishes she had purchased. For example, one change already happening is that travel will start to pick up, especially as more countries contain the virus and administer vaccines. I imagine that we're just about to start traveling again, Lee said. I can imagine that once people are confident enough, travel will be like a coiled spring. And if travel is up, consumer spending will go up and oil prices will shoot up too as fuel becomes in demand once again. Want to know whether the share price of a company will move up or down? Find the drivers of the investment. Taking JB Hi-Fi as an example, the electronics store's price plummeted at the end of March, but then rebounded strongly in the final months of 2020 as the global surge in online shopping drove sales growth. Write down one or two positive drivers and one or two negative drivers to work out what the share price is like and whether it's likely to go down. In the case of JB Hi-Fi, Lee predicted its share price would remain high in the short term, but could drop as people spend more on travel. Embrace volatility. Investments will naturally rise and fall, but this shouldn't hold you back from investing altogether. It's the up and down movement that makes that allows me to get better return on my investment, Lee said. For example, buying a property during a downturn would see the property increase in value when the housing market eventually bounces back, she said. And if you just did that 2 or 3 times in your lifetime, there's your nest egg. There you go. It's just that easy, guys. So it's not about wasting that volatility. And I like to think, when everything's falling, well, there's an opportunity there. Often I like to embrace the volatility instead of getting scared by it. Find the niche. If you can spot a trend that no one else has spotted, or turn tidbits of information from your network into an advantage, you may have an edge. Investing is all about doing something where you have a little bit more than the next person, said Lee. One of her friends is in the fashion industry, and Lee said she was always asking about fashion trends and what's happening. One of the reasons why she invested in retail during the lockdown was because her friend told her they had experienced their best Mother's Day ever. Why? There were no staffing costs and less rent to pay. I immediately knew that these types of stores were going to be doing well. Don't overlook opportunities in Asia. During the pandemic, Australia's stock market, which has historically been very reflective of Wall Street and the European indices, was relatively insulated thanks to Asia, said Devon. China in particular has been the first nation to rebound from the crippling economic effects of the pandemic. In fact, it was the only economy in the world that expanded during 2020, and has set itself a GDP growth target of more than 6% for 2021. We're in a new world order now, where we're sitting in the part of the world that you want to be investing in, said Devon. While there's a lot of interest in well-known US companies and brands like Facebook or Google, don't limit yourself to these household names, she added. I would encourage you to look closer to home, to China, and seek out advice on investments in those areas. For instance, China, as a growing middle-class economy, is spending more money on activewear and health and well-being. I actually think China is going to make the gains and just be the blockbuster here. 9. Leave the decision-making to the experts. If all of this is too overwhelming, remember, there are experts who are paid to make investment decisions for you. Sometimes you might not have the time to do all the research, says Devon. One way to invest in the stock market is to buy a bundle of companies through exchange-traded ETFs. Exchange-traded funds, ETFs, some which mirror benchmark indices like the ASX 200. You could take a basket of retailers and invest in those if you don't want to put a bet down with one name. It's Lee and Devon's job to invest money for other people, Lee reminded. Don't feel pressure that you have to learn all of this in a hurry, she said. The key is just to get started. Number 10, engage with your super fund. Australia's superannuation system is under-recognised and has contributed more to our society than we realise, said Devon. If you have a super fund, look up what you're invested in, she said. If you haven't taken charge of your super, it's likely you're in a balanced fund, but you might actually be able to afford more risk. If you're not ready to start investing, take charge of your super may be the first step, Devon added. Maybe that's where you start to take control of your finances. When we're in really, really bad situations, we all feel better when we take control. That very, very simple thing will actually help you move forward. 11. Pretending your money is a business. Rich women author Kim Kiyosaki told Yahoo Finance that women needed to take their money as seriously as if it were a business, and that means picking up the lingo. If women started treating their money as a business, because it is, and started by learning the language of money, income, expenses, assets, liabilities, then they would be so much further ahead of the game. 12. Microsteps. Microstep your way to healthy habits. There are tiny steps you can do to manage your mental well-being, and this will impact your performance, which will ultimately flow onto how you approach your finances, said Thrive Global Asia-Pacific manager Alex Christov. They're as easy as leaving your devices out of the bedroom before you go to sleep or getting enough sleep. There are also affirming statements you can say to yourself to make differences to your mental mind, such as I can focus on what I can control or I can take care of myself, which helps me take care of my team and my company. 13. Ask yourself what being rich really means. What does being rich actually mean to you? The first step on the path to true wealth creation is being able to answer this question, said Yahoo Finance Australia Editor-in-Chief Sarah O'Carroll, who said the pandemic had thrown millions of lives and livelihoods into chaos. Well, there's some people that are, for the first time in their life, actually stepping away, and they've been on this constant treadmill, just chasing, and maybe they're starting to realize, that's not really what life is about. Or maybe that's not worth it. Oh, look, I get to spend time with my family who I've never seen. During COVID-19, the issue of mental health came to the fore. At the same time, that interest in the stock market took off. In 2020, many things we took for granted were suddenly taken away from us, and it taught us the value of our freedom, the value of our health, and the value of our personal relationships, said O'Carroll. There are many pillars to wealth to consider, including mental, physical, and societal, social well-being, she said. So whatever you want to focus on, write it down. Just articulate a personal goal, whether mental, financial, can help you turn it into reality. If you do nothing else this morning, write down one goal or dream that you want to achieve and carry it around with your wallet or bag, she said. So there we have it, guys. 13 lessons from this breakfast event. Really, I mean, cool. Nothing too surprising at all. I mean, don't let inexperience stop you. Don't assume investing is difficult. Start sooner than later. Figure out your risk appetite. Nothing really new or exciting here. Understanding what drives the market. Embrace the volatility. Find the niche. I mean, what else can you say, really? That's the thing. It's just getting control of your own life. Getting control one aspect of it. I mean, I'd throw stoicism in the mix, which I think they really should. Engage with your super fund. That's good too. So at least know what's going on there and get control of it. What do you reckon? As always, let me know your thoughts and opinions on this one. I don't know. I mean, is this the breakfast? Are they sitting there watching a screen? You wouldn't be very happy if you're paying that money for it and there's no one there. Let me know your thoughts or opinions. I'm sure it was at the other side of the room. Thanks for watching. Like, share, subscribe to the channel. If you're a fan and enjoy the content I create here, there are a few ways you can support us. You can join us on YouTube or Patreon. You can support us using affiliate links from Amazon, eBay, Independent Reserve, or AussieBroadband. You can buy merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Take care, have a great day, and I'll see you all next time. Bye for now.